Time for a weekly Q&A. We'll start with the comments on Discord. Eventually we will migrate all the comments just to Discord, and then the comment video will just show up there. Biggest question that markets seem to be digesting is whether the Fed was hawkish or dovish in their statements and presser. I think if you went into this looking for a hawkish statement, you were disappointed, so you thought it was dovish. And I think if you went into this looking for dovish statements, you were disappointed thinking it was hawkish. So I don't think the hawks said this is hawkish and the doves said this is dovish. I think it's the other way around. The hawks said, this is kind of dovish, and the dove said, this is kind of hawkish, which means it's probably neither, and it's probably well balanced. I thought it was well balanced. I didn't read into it any particular direction. And again, with these devices and the ding ding ding, let's see if I can move them further away. Next one, does BOC activity or actively manage its U.S. reserves? I would have thought that they sold U.S. treasuries because Canadian companies are trying to get ahead of the tariffs and had extra need for U.S. cash. This is typically why they hold reserves, is to supply the banking system with foreign currencies to match trade patterns. And they usually hold some reserves in case they need to defend their currency, because you have to be able to sell some currency to buy back your own. And usually they hold them across a number of maturities from short-term to long-term. And they're not too concerned about the exchange rate, meaning they're not concerned about the purchasing power, the domestic purchasing power of the foreign currency. They're more concerned about the external purchasing power of the foreign currency, which means it's only price risk that they care about. If they had an increased demand for U.S. dollars because of the front-running the tariffs, let's say, they're more than likely to sell their short-term U.S. holdings because they'd have less currency, less price risk in those. So yes, that is why central banks hold foreign currencies, usually in proportion to the trade that it does, so that it can supply the banking system with those currencies to support trade. I don't understand how my FDX share will be 140. So in that video, I explained if you did the 200 and you shorted the 200 put and the call, you got about $60. So if the put was put to you, your cost on those would be 140. You did buy at 230 as well, so 140 and 230, the difference between those is $90 divided by 2 is 85. Your break even on the full position would be 185, which is roughly about 20% lower than where it is, and it's already down some 25%. So in terms of risk reward on that, to pull back 45% seems highly unlikely, considering it's one of two large transportation networks. At the margins, do you think central bank shifts away from U.S. treasuries would favor selling shorter term to maturity notes? Would booking a loss on longer duration bonds create any incentive to hold those longer? Central banks are able to open up swap lines with other central banks. So the Bank of Canada can open up a swap line with the Federal Reserve if it doesn't want to take on the price risk of a particular treasury, and you'll pay a rate for that. You can create your own swap line as well. So let's say that this is the central bank in the U.S. This is Bank of Canada. On a swap line is we'll provide you with U.S. dollars and you provide with Canadian dollars, and you will then pay the interest rate in U.S. dollars, and we would pay the interest rate in Canadian. But usually when you do this, the Bank of Canada is sending over Canadian securities. and the central bank is simply holding these securities and rebating the amount. And the central bank here sends securities over to the Bank of Canada, and if you liquidate those, you still have to pay the U.S. amount, because if you were holding this, you would pay that amount. Another way of doing it is you don't even need a central bank in here. You can say, well, the Bank of Canada can issue U.S. denominated bonds, and it could get its U.S. dollars that way. And it could be holding U.S. dollar denominated bonds that are underwater. In other words, that have a loss. So you could sell this and book a loss, or you can issue a U.S. dollar bond. You're going to get some income on this one because it is going to have a coupon, and you're going to pay some payment on that because it has a coupon, but it's probably the same thing as the difference between the two currencies. And you structure this such that they mature on the same date. If they mature on the same date, you've taken price risk out of the equation, and again, the central bank doesn't care about the domestic purchasing power of the U.S. dollar, only the foreign purchasing power, because U.S. dollars are not used in Canada interchangeably with Canadian dollars. So it really doesn't matter. They're used to purchase U.S. goods, so you only care about the purchasing power in the country in which they're being used. So you can create your own swap line by doing something like that. Canada issued $3.5 billion in 5-year notes at 111 over the 5-year Treasury. They issued $3 billion last year. I can't figure out more information on the specific issuance type. Well, that's probably what I just described here. I'm assuming this is normal practice. Probably. Is nothing burger? Yeah, probably nothing. It doesn't signal. I don't think this signals anything other than foreign reserve management. Let's see. One thing that stands out to me from the video is that the market is underappreciating the risk of how the administration will respond in a time of crisis. It's probable there will be a crisis sometime in the next 2 to 4 years, like a banking crisis or debt limit crisis that will require quick action and coordination across the government. Well, the last for SVB, I don't think there was much government help at all. The central bank did pretty much all the heavy lifting on that one. And then Elizabeth Warren criticized them for it without, wasn't part of the solution at all, but she certainly criticized it because the cameras were on her. So I would assume that a central bank would just step in and do everything they can. There's real risk that won't happen in a timely manner. It could lead to a deeper crisis. Well, I sort of seem to think that is the case, that if you got a recession in the next couple of quarters, if these tariffs push the globe into a recession, I put a low probability on there being a fiscal spending bill to help support the economy from this administration, which means the central bank would have to do all the heavy lifting. But yeah, I think the fiscal would be missing in action on any fight that's needed. With these recent macro changes and the room left to fall in SPY large caps, suggest deviating from the video on buy and hold allocations. Well, no, not if you're buy and hold. That's the point of buy and hold, is you're not going to attempt in any way whatsoever to time the market. You're going to have a strategic allocation to an asset class, and you are investing for the long term, and that works. If you look at SPY over the long term, right? I mean, it does have these sorts of things here where, yeah, there are these drawdowns, but they are random. They're recurring, but they're not uniform, which means they're very difficult to predict when they'll happen. But if you're over here, I don't know that I would worry about trying to time any of these if your goal is a portfolio value at this point in time. I would just get the 10 to 12% compounded return that the market tends to deliver over the long term. I wouldn't waste my time with trying to time the market. What I would time is my contributions, is when you do see these events, that is when you contribute more money and you buy at these levels. And it drops down, that is when you contribute more and you buy at those levels. right? So you should be buying as you contribute to your portfolio. Money goes into your portfolio, goes in as cash, and then when you see the market pull back 3, 4, 5%, that's when you commit your cash each and every time. You're going to have drawdowns. There's going to be some point where you might have 1.5 million in your account, and suddenly, after an ugly market reaction, you might be down to 1.1 million and start to panic, saying that's my retirement. It's disappearing. But if you're like 52 and that happens, don't worry. By the time, at some point before you hit 65, it'll recover and go on before that. What you do at this point is you add more money to the account. If you think about the market as a diversified portfolio of 500 large cap stocks, the idea that that index can go to zero is, it almost has no probability. And I'll tell you, if it does go to zero, you've got a bigger problem. Chances are money won't mean anything if that thing goes to zero, because something really bad happened. Really bad. The whole society fell apart, which means money's not going to help you. You better have drugs and guns. If the GSEs were to be recapitalized, would their valuations return to pre-GFC levels? Oh, I don't know. I'd like to see some surface level analysis of the potential gains to be had here. I'd say that probably their valuations would be higher in a public market than in conservatorship. Sure. Preferreds have been knocked around WSB and other social media for a long time now. WSB is Wall Street bets. Conservatorship is a complicated thing to get into, but my take is that Fannie Mae paid about $17 billion in U.S. Treasury last year. Yeah, it does provide a lot of income to the Treasury. Almost all of its net income. If anyone here is an expert in this, I'd love to hear your thoughts. Usually, a market will give it a higher valuation than if something were private. So, for example, if you are buying private companies, your multiples, if you're thinking about multiples of EBITDA, are anywhere between 4, 5, and maybe as high as 8.5, depending on what you're buying. And that could be bought from a public company that's in the same business as this, that might be trading at 12.5 to 15, even 16 times EBITDA. So the public market will value it more highly because you have more money that is bidding on it. This is private, no money is bidding on it, right? RRP at 200 billion, why did it stop falling? Well, you have uncertainty in the market. You have money that's leaving, well, at this point in the US, it was leaving both stocks and bonds, and probably just moving to cash. So money market funds probably started getting more money and said, well, okay, well, we can't absorb this in the market right now. Let's stick it in the reserve, the reverse repo. 5% real yields at 1.49. Markets pricing in a recession or really slow growth. Once we're done with tariffs and inflation, nominal 10-year will get slashed quickly. Yeah. If we expect the real yield to stay at 1.49. You still watching GME? No, not really. Yikes, I didn't notice that 5-year with a plummeting real rate and break even migrating upwards. And that is true, as if you look at the 5-year real rate, it was down, while the 5-year inflation, the break even, was up. That's the difference between the tips and the nominal rate. It's not just the SEP signaling stagflation, the tips nominal market is too. Though it looks like it's been this way for a month, real yields dropped in late January and nominal 5-year really moved in mid-Feb. Doing a live stream. Okay, there we go. Let's just scroll through that. Did that. In your market outlook, you discuss SPA ETF. Any videos in the applied level on how to analyze the broad equity market index? I don't know that you would analyze a portfolio of stocks. So an ETF that's holding 500 other stocks, I don't know that there's analysis you do at the level of the ETF. The ETF is really just the market value of all of its holdings, which is the 500 stocks, or 502 or 503 actually. So the only thing you have to worry about at the level of the market is the direction of the economy. And the market portfolio will respond quite well with the direction of the economy. So if we think GDP growth is going to drop or even contract, the market will come down because earnings will come down, because that's what makes up GDP. If you think GDP is going to be strong, the market will be strong. If GDP goes sideways, then we probably would have a range-bound market as well. Watch the Two Big Rules video, and according to the recommendations given, I should start at the market level as I have no experience investing in public markets. That's true. Watching top-down video and applied analysis section, but just got started, so maybe I haven't gotten to the part where you go over that topic. Okay, maybe a little early. Let's see. Could you explain why financials have done so well compared to other sectors in the past quarter, even though money market to capital market curve has been relatively flat? Whenever short rates are dropping, the bank's wholesale funding costs are dropping, and the bank engineers its own upward sloping yield curve. It is better if the yield curve is upward sloping on its own, but it will engineer an upward sloping yield curve. But dropping rates are good for banks. The other thing that banks may be responding to is potential deregulation in the banking sector, particularly as it applies to capital adequacy ratios. If those change, they may be able to sell off some of their treasuries and put that money into riskier loans. Riskier in the sense of riskier than lending it to the government. So they could be moving up in anticipation of deregulation as well. Okay, that's more on the FCX. Federal Express, I've already answered that question. Two questions with regard to the most recent market outlook. How and where to obtain the selling of treasury figures? Mark referred to as follows: foreigners are net sellers of U.S. treasuries. That was a story in Barron's. I googled both the TIC monthly report on cross-border flows and Federal Reserve balance sheet. You almost have to be a central bank watcher. So you can, every central bank every week publishes its balance sheet along with its reserve account, and you could see changes from week to week in the reserve accounts. So you would have to be looking at each central bank week over week, right? And watching that over time. I don't know if you really care to do that. There, every day you're going to come across a new thing. It's like, oh, how do I track that? Oh, how do I watch that? Well, you're never going to be able to watch it all, ever. And every day there'll be something new, stress in this metric over here that measures the difference between these two things. And you think, I didn't even know I was supposed to be looking at that. I still get that every day. It's like, well, I didn't know I was supposed to be watching that. I didn't know that was important. Now it is for 3 or 4 days, and something else is important. You're never going to know it all. Which is why having publications like Wall Street Journal, Barron's, things like that, and being up to date on the news feed is important, because you don't have to be watching it as long as you can read about it, right? So that was a story from Barron's. Where would I find Fed funds price term structure? On the Fed Watch Tool CME site. The Fed funds price term structure. There's a drop-down menu at the top of the page. It's kind of just up here if you're looking at the page. There's a drop-down menu. Go all the way to the bottom and you're looking for STIR Analytics. All right. Short-term interest rate, STIR Analytics. And then you'll get a screen up that has a box, and you have a bunch of menu items down the side here. One of them says FF. Click on that one and you will get the term structure. for the Fed funds futures. And this might be a very hypothetical question, but if U.S. Treasuries were to lose their status as the safe haven investment, what could be next in line? The euro. The euro would be the next in line. In fact, before the great financial crisis, there was a belief that the euro was almost on par with the U.S. as a desirable currency to hold. In fact, there were some instances where the euro was favored over the U.S. dollar, but the euro would be the natural second place. German bunds, even with a non-reserve currency. Well, when we say reserve currency, what we mean by that is it's a currency that central banks hold in reserve. Typically, they hold them in reserve for one of two reasons. Number one, it is a safe place to put extra funds. Or number two, more than likely, it is because of the amount of trade you do denominated in that currency. The US dollar is a de facto currency for international trade in commodities. Oil is traded between countries in US dollars. Minerals are traded between countries in US dollars. Almost all commodities are traded in US dollars, even between two countries that don't have the US dollar as their domestic currency. There is an attempt to move away from that, to conduct trade in oil in different currencies. For example, between Iran and China in renminbi or yuan. So there are attempts to move away from that. If you do, central banks will hold currencies in proportion to the countries they trade with. If the U.S. continues to pursue an isolationist policy, they may not call it isolationist, but it is. If they continue to pursue a policy of we're going to take your manufacturers out of your country and they're going to move to our country to absorb everything in the world, that is isolationist. If they continue with that, well, then every country will have less and less trade with the U.S. Because, well, the U.S. will try to make everything they need and have no trade. Nothing imported, but they're going to want to export, but they're going to have pissed off all these other countries that will go around the U.S. Why would they willingly lose, right? At that point, central banks will hold in reserve the currencies that match our trade balance. So those currencies, whatever the biggest one at that point in time, would be the reserve currency. The reserve currency meaning that central banks hold that one the most in reserve. So yeah, it could be that the U.S. dollar may not lose its safe haven status, but may lose its reserve currency status if international trade moves away from the U.S. dollar. If the belligerence, and you have to use that word, if the belligerence of U.S. trade policy, because it's not diplomatic, the threatening is not diplomatic, that's just belligerent trade policy. Nobody likes to be told what to do. And maybe you can tell me what to do, and maybe I'll have no choice but to do it. But you've made an enemy today, because the moment I have a chance to break away from you or to move away from you, I will. I will have no loyalty to you. The moment you need something from me, it's going to cost you, because I'm certainly not going to step up and say I volunteer, right? So nobody likes to be told what to do, even countries. There's a diplomatic way to do this, and there's a belligerent way, and the U.S. is pursuing a belligerent trade policy that will work against them. Could EM bills be considered safe? No. You need a large currency. You need a large currency, and you need a large treasury program as well, because I need to be able to move into your bonds and move out of your bonds rather easily. Well, with Germany issuing, what is it, 1 trillion, that starts to become an alternative for central banks by saying that if I hold euros, at least I have some place to put them. I have a nice big liquid treasury market in which to put the euros that I'm holding. So that is required. maybe the U.S. doesn't quite understand, or at least the administration, the current administration, doesn't seem to understand that if you paid off all your debt, you would no longer be a reserve currency because you would have no treasuries in which to hold U.S. dollars. Nobody would hold them. So you cannot, if you want to be a reserve currency, you have to have a very deep bond market, which means you have to issue bonds, period, and pay interest on it. That is the cost of being a reserve currency. It's not free. Let's see if we could just hop on over to the YouTube ones without me having to pause this now. And there we go. We're on the YouTube comments now. Eventually, the Discord comments will become more and more. The YouTube comments will become less and less until June 15th, when the comments section will go dark on YouTube. And the market outlook will be short. It will be the screen on duration, the yields, and it'll be the screen on beta, which is just the S&P. But the middle stuff I do will only be available on Discord. You can get on Discord if you're from YouTube. Let's say you just have to go to mm.com and open a free account. I'm not asking you for anything here, right? Just open a free account. And sometime in the next 30 to 60 days, there will be a link there for you to join Discord. And you'll be able to join Discord as an A1. A1 means you can see the market outlook. You can see, but you can't comment. I will allow comments based on merit, which means if you demonstrate to me that you have a university degree, or there'll be a list of things that I say, if you have these things, then yeah, well, come and join the conversation. We want to hear what you have to say. But what we don't want are, well, I'm sure as you scan down the comment section of certain finance videos, you know exactly what we do not want, right? And it gets rid of all the bots. My God, you have no idea how many comments I delete every single day of these bots of, oh my God, my life has changed by Mr. Reynolds Smith. I'm making 8.3 Bitcoin a day, and you know those things that go on for 5-6 comments, like just ridiculous stuff. It's all just bot scams, and I'm tired of it. So yeah, eventually it'll all be on Discord. I did a live on Discord, recorded the live, and it is available on Discord for Discord. So I'll probably do a few more lives on YouTube before it's all on Discord. So just do this. Just go to mm.com. Go there. It's free. And you'll get the level 1 2018 CFA content. Maybe you watch a few videos, right? And then once you're here, you'll get here. Okay, greetings from Winnipeg, currently third year BCom. Just wondering if it's even possible to write L1 before graduation. Yes, you can. Currently working towards L1 February 26th. You can. Seniors in finance professors say that they wouldn't recommend till I clear all my finance major courses. Well, it is work, right? On top of all the coursework you have to do, this is work as well. Can't wrap my head around the idea of waiting, as I'm actively putting in 2 hours every day to L1, and I even finished quant and fixed income. So when they say they don't recommend it, they don't recommend it for the average student, right? If you're in the right tail, if you're above average in your classes, and you'll know whether you're above average, then you may be able to get it done, but the average probably wouldn't. Not that the average couldn't pass level 1, just that the average would find it overwhelming doing their coursework and level 1 at the same time. Sorry for the half question in the last videos I asked earlier. I'm actively doing DCA in SPY, so under prevailing market sentiment, overvalued market, should I be bearish and hope for correction time to time to get my cost basis down? Yeah, I would seem to think that if you have a contribution plan and you're young, you can afford to wait T-bills pay 4.33%. You can simply buy 90-day T-bills and roll them over, and if the market gives you an opportunity to buy at 5 or 6 or 7% lower, you take that opportunity, sell your T-bill, move into the market. Currently only has 12,000 views. Why? This is more valuable than CNBC, Bloomberg, Fox. Okay. I thought you were saying ha to me, like loser. There was a time last year, almost all last year, where my market outlooks would get between 8,000 to 12,000 in a week. This one here is at, I think, 17,000, and it's Wednesday morning now, so it's been almost 3 days, and we're at 17,000. So it is higher than it used to be, but you'll never see my market outlooks with 50, 60,000 views. For that, you need to have an aspect of entertainment. You need to be entertaining, not just informative. Because informative requires active listening. It's actually work to listen. And especially if you don't understand what's going on, most people won't break it down and say, okay, well, let me figure out what's going on here, because that also requires work. They'll just move on. Entertainment will always outshine education in terms of engagement. 20 to 1, 30 to 1. Easy. If I want to, put a 10 behind the number of views I have, or put a 0 instead of, 17,000, get 170,000, I need to be entertaining and hyperbolic. Meaning I have to have titles like Bitcoin to $1 million, Tesla is going to $20, market is going to crash 30% in the next month. I got to be hyperbolic like that. And that's all clickbait, right? And I'll get the clicks and I'll get the views and I have to have, just a whole bunch of camera angles that change rapidly to keep your eye movement moving around to entertain you. There's a whole science behind how you keep somebody watching, is you never have anything on the screen for more than 6 seconds without changing the view. 6 seconds later, you change it again. You change the camera angle. You change the perspective. You zoom in. You zoom out. You pan over to a news headline. You pan back to the guy. You pan out. Another news. And you got to keep doing that. It's a lot of post-production work to get that done. And if you're going to do that, if you're doing all of that, well, then you're monetizing, because that's what you're doing it for. The views lead to dollars. I don't monetize. So it doesn't really matter what the views are. But it would be nice if more people found it valuable. More people are finding it valuable, so that's rewarding enough. Statement about only 49 people working at Freddie Mac is true. But the day he came in was a work from home day. So this was purely evil and dishonest move by him. Well, it sounds like we have somebody who works at Freddie Mac. 140 already explained that. Do you think countries would start seeing internet app usage as a U.S. export? Ad revenues on Google, YouTube, Instagram can be a large, if not major, revenue if you want attention of our citizens. Pay up. I don't know. I think that would be very difficult to police. I think that would be very hard to do. Besides, if you're in Canada and you're advertising on Google, for that is an export from the US, not an import. You are exporting a service to Canada and importing the revenue, right? So you're already Google and and Facebook, since they're American companies, they're already exporting advertising services and bringing in revenue because of that. So I don't know that would be taxed. Maybe the other country might tax it, but that is so hard to track. How would you even begin to do that? Because bits and bytes don't cross borders. You can't count it. Let's say I upload, I use Amazon as my cloud, and I upload my hard drive to Amazon, and I pay $13 a month through my PayPal account. How are you going to get that done? What border did that cross? Who checked the cargo? What broker, what customs broker would you need to get that done? Once you get into the world of bits and bytes, it's the only thing you can really do is charge a local sales tax on it. So I would have to pay Amazon, or Amazon would have to charge me $50 a month plus the Canadian sales tax, and then remit the Canadian sales tax to the government because I am in Canada. I think that's the most you're going to get done on that. Where can I find your email to contact you about applied level Discord link issues? Support at markmeldrum.com. How a bond ETF with high duration such as TLT fluctuates in price? Because there's an inverse relationship between yield and price. So as yields go up, prices go down. It's as simple as yield curve comes down, present value, future cash flows go up. That's it. That's it. If you're long TLT, you believe the entire curve will come down rather than just the Fed funds. That's exactly it. What are your thoughts of what the EU and ECB is doing with things such as savings and investment union? It's not really my thing. I'm not really aware of all the small things other countries are doing. How come an inverted yield curve is not good for banks and their NIM? Well, because banks borrow at the short end of the curve and they lend at the long end of the curve, right? So if we think about the balance sheet, you have deposits and you have loans, and these deposits become loans. You also have some reserves over here because they need to meet day-to-day withdrawals. Sometimes that's not enough, so they have to use wholesale funds. And wholesale funds are the overnight market. Money is 4.33% there right now. So if they're borrowing short-term at 4.33, they want to lend out long-term. So if you have a yield curve that looks like this, where the 10-year is below the 3-month, you have to engineer your own upward sloping yield curve, right? Which makes, based on where the 10-year is, it makes loans very expensive. But if you have an upward sloping curve and you're borrowing here, the 10-year is already doing a lot of the lifting for you. You don't have to go much higher to get your net income margin to be the same. So that means that you can originate more loans because you could be more price competitive on those loans because it's got a tighter spread over a 10-year. So an upward sloping curve is just better for net income margin. Now the bank can engineer its own, but there is a limit to how far to what your spread can be. If you have a very good client, they're going to argue, no, I should be here, and notice what your spread is going to be at that point. It's going to be compressed. So upward sloping curve does a lot of the heavy lifting for the bank, in the sense that your best client obviously can see where the 10-year is and say, well, if I get 200 basis points above the 10-year, I can see where the 10-year is. But if the 10-year is lower and you're trying to get 300 basis points to get your net income margin, your best clients will say, whoa, 200, man, come on, back it up. If the Fed were to liquidate MBS, would that put upward pressure on mortgage rates? I think they would do it very, very thoughtfully. Bostic did this week address that in an interview with Mike McKee for Bloomberg. He said they would do it, if they undertook that, they would do it in such a way that it wouldn't put undue stress on the mortgage market. So I think they would do it to the point where it doesn't stress the mortgage market. Waiting to get a role in Discord. In the meantime, what would be the impact of MBS performance as an asset class? Okay, I already answered that. Non-tariff related subject, Microstrategy. There's a lot of numbers in here. The preferred first issuance, 500 million at 8 in perpetuity. Now another just over 700 million at 10%, at 12%. So we average out, say 1.3 billion at 9.25. Core business loses money. Yep. So they isn't paying the 120. Nope. Aside from that, well, they can pay this in shares or in cash. They'll most likely pay it in shares, so you can see the amount of dilution that will come from that. The market seems to be enamored that these are convertible at $1,000. If Microstrategy gets to $1,000, they're convertible. Yay! But hang on a second. The share dilution every single quarter while it's under 1,000 is just this alone. Never mind the conversion diluting shareholders. It is this alone. The shareholder seems completely oblivious to this whole thing. And Microstrategy is doing everything they can to keep them looking at something else. Our Bitcoin yield. Well, that is assuming that you're going to pay all of the coupons in cash and that they convert. But all those coupons will be paid in shares because you're right. They don't have the cash to pay it. The coupon will be paid in shares. Aside from the odd news-related bounces, I don't see risk assets. I wouldn't call Bitcoin a risk asset. I'd call it digital risk, but I'd take out the word asset. Like Bitcoin performing very well. Average Bitcoin cost now $70,000. First few set of converts have paid out about $60 million in interest, 24 before zero coupon bonds came out. Interest costs now approaching $200 million of cash. Incinerating Bitcoin play. Do you think this starts to crumble towards the end of 25? I don't know when it starts to crumble, but this is a one-way street. Microstrategy can't sell a single Bitcoin because as soon as it does, the market is going to front run it, and you will cause a crash in Bitcoin. And the lower it goes, the more people will sell because Microstrategy will have to sell even more Bitcoin, which means the lower it goes, which means more people will sell because Microstrategy will have to sell even more to meet whatever obligations. So it cannot sell a single Bitcoin. If it does, it has to do it all at one time before the market figures it out. The volume isn't there to absorb 500,000, 506,000 Bitcoin. The market isn't there to absorb that much in one day. There is no exit. The only exit, as Michael Saylor had said years ago, the only exit is Bitcoin. You must keep going forward. You have to keep going forward. There is no exit. And let's say you own 100% of this imaginary thing. Well, how do you monetize that? What are you worth now? I mean, it eventually ends at zero. This game, no matter how it goes, eventually ends at zero. So I don't know why the shareholder is so eager to believe, but that's the definition of a cult, right? With interest costs now approaching, do you think this starts to crumble if there isn't a meaningful appreciation in Bitcoin? At what point do you think they just destroy shareholders with dilution? They already are. That is the path they're on. This will end badly. There is no good ending for this. This just will end badly. It's just when? I don't know, but it will end badly. There is no other way. I realize they are selling shares as fast as the market will take them, but at some point this just crumbles under its own weight. Can you help me understand how that actually plays out? It doesn't. There is no sensible business model here that a Warren Buffett would say, yes, this makes sense. This is a pyramid scheme, and you have to keep it going, and you have to, if you're going to keep that Bitcoin yield 7.7%, they said you have to keep buying in larger and larger and larger amounts, which means more and more and more dilution. Eventually, you get to the point where every share should be worth its value in Bitcoin. So if Bitcoin's 100,000 and you buy one share for $1,000, you should buy 1/100th of a, you should be indifferent between buying that and 1/100th of a Bitcoin. Right now, based on market cap, you're paying 2 times the price of Bitcoin for one share. That will dilute you. It will dilute you down to 1 time. You are agreeing to lose 50% of your value. You are agreeing to it willingly. Now, if I sat down and tried to explain this to a Microstrategy fan, it would be lost. Their ears would be closed. They wouldn't be listening. Fingers in the ears. La, 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 can't hear you. They would refuse to hear what you're telling them. So well, some people do deserve to lose their money, but it will end badly. Have you considered announcing where people of each level of C of A should be at for each test date, like last year? I enjoyed the quick conversation at the beginning of each video in the past, but understand if you decide to keep it market focused. I don't know. Those videos, how I judge whether I should continue something is the views I get on them. Those videos barely got 1,500 views, 2,000 views over the course of a week. That tells me that there's very little interest in that. Otherwise, there would have been more take-up. And if there was more take-up, then that encourages me to do even more. But it was very, very low, very, very light. Maybe one a month might be better. I don't know, but it was very light. Or maybe rather than on YouTube, I should just make them only for our own CFA candidates. One a week or one every month, just on our site for our own candidates. But the take-up just wasn't there. Do you often use the ISLM curve as a framework for thinking about the economy? It is a good framework. Finance is hidden behind behind those curves. But in a very formal sense, no. Once you have the formality of it, you don't really need to keep referring to it. That the principles behind it's really just become ingrained, and it's not as if you're breaking out your charts and looking at things all the time. Just the tendencies are something that I wouldn't say that you can bank on, but because in economics there are no deterministic relationships. There are no if A then B. It is if A. In some cases, more than likely B. In other cases, maybe B. And in other cases, more than likely not B. But never if A, then B. What would you say your average holding period is? I don't know. Things like Lira, TFSA, RSP, years. Even in my own accounts, I have some holdings that I have no intention of selling for. Well, they're there for the income component. I wouldn't be selling them for years, or unless they really went up like 20-30% in the next month, I would say, wow, I'm gonna take that, obviously. But for the most part, quite long. What was your return last year, not considering cash? I have no idea. That is, and that's not a dodge. I don't know. On everything I have, because I have private investments, I have long only investments, I have externally managed money, I have my own, I have bonds, I have equities. My return on what? Right? My return on just the bonds, my return on just the equities, my return on just the Canadian equities, just the American equities, my return on what? I know it sounds like a dodge, but if you say, well, what was your return? Return overall, you're saying excluding cash. I don't know. I'd have to figure that out. Does cash also include T-bills? Does it include, what would be your definition of cash? Up to what bond tenor would be cash? What about currencies? What about an active bet on the peso or on the euro? That's cash. Would you consider that? It's not that simple. When you ask that question, it's like, well, what part do you want to know what the return was on? Right? Overall, I don't know. I don't really figure it out that way. Did you complete all 3 levels of CFA? Did I complete all 3 levels? You don't know who I am, I guess. What are your thoughts on Microstrategy after the brand change? Brand change, who cares? I think they're getting rid of the micro because I think they're realizing that, hey, listen, we'd be millions of dollars ahead if we didn't do any software. In which case they are just an ETF. Right now they're a money losing ETF. What is the movie where he said, I love you, but you're not serious people? It's not a movie, it's a series called Succession. And if you haven't watched Succession, oh, don't deny yourself the pleasure any longer. Get on that. 0 day to expiration options on SPY. Are there any technical indicators such as volume, money flow, MEC? No, I don't look at any of the technicals at all. Nothing like that at all. What is market correction and correction in price? When you're 10% off a recent high, that's called a correction. Research section of your Discord, there are many research reports that don't understand anything from that, what to do. Well, if you don't have any inherent interest in any of the research reports, just don't use them. If you don't understand what any of them are doing, it's because you're probably early in your learning career. Avail yourself of the free level 1 stuff on markmeldrum.com. Go through some of that first, and then some of those research reports may start to come into focus for you. Complete beginner in finance, should I use Grok or ChatGPT to understand each section of the report? Yeah, sure, you can do that. I see sometimes there are nice looking people, even with good background and experience. They just give bad financial advice and life advice. Nice looking people, what does it matter if they're nice looking? Which just sounds nice and affect us in a bad way in the long term. How to recognize these types of people early stage, or what other advices will you give? It's a hard one. Yeah, I think with the explosion of social media, everybody and their sister has advice to give. All right, and everybody's out there handing out advice, and a lot of times it's just something they read in a self-help book going, okay, this is a video and that's a video, and they're just repeating stuff they read somewhere, but they don't really know. Look at who is providing the advice and what are their credentials, right? If it's a 24-year-old life coach, I can tell you right now, there are no 24-year-old life coaches. They just don't exist, because you don't know anything about life at 24 to be able to be a coach on anything. Well, I shouldn't say on anything, but in life in general. Determine, just figure out who these people are in terms of their background, their education, what qualifies them to be listened to. I don't know. I know you don't have a crystal ball. Says who? But what do you think will be the effect on the markets world if Trump tries to annex Greenland? I don't know. If he tries to annex Greenland, one of the things that he's very good at doing, and you have to give him credit for this, is he doesn't break the law, and he doesn't break social norms in private. He doesn't do it in back rooms. He does it right out in the open. Because what will take you down is the stuff you do behind closed doors when it gets out. But if you do it right out in the open, well, nobody has anything on you. And if you do it out in the open enough, you begin to normalize that kind of behavior. Now Trump can do and say almost anything, and there are no consequences, because it's just Trump being Trump. It's just become so normalized now that there are no consequences. What would be the consequences of him annexing Greenland? Who knows, but probably not as much as it would be had George Bush tried to do it or Obama tried to do it, because they didn't normalize that type of behavior. They didn't normalize the expectation of that type of behavior. They committed their crimes behind closed doors, right? There's probably a lot of stuff that happened behind closed doors that neither one of those two presidents want out in public. But for Trump, heck, even the last meeting about bombing Yemen happened right out in the open. They invited a journalist into it. So, if you're going to commit your crimes, do it right out in the open for everybody to see, so nobody has anything on you. I don't know how they would respond. It would be interesting. I watched an interview with Besson today. He said April 2nd list of tariffs will be based on currency manipulation levels, not tariff barriers like VAT and the actual tariff levels. Actual tariffs are pretty easy to understand. It's hard to argue that's unfair. I'm not sure how you would put a value on currency manipulation when most countries' currencies trade openly, aside from known interventionists from countries like Japan and India. But things like that, I will use the one I'm familiar with, HST. I don't see how that's a non-tariff barrier. Neither do I. It's just a consumption tax. And you said it right. It's a consumption tax where the product is made domestically or imported. The tax is paid at the retail level. Exactly. It is paid on all goods and services, whether it is imported or domestic. It is paid on all of them. So that is not a barrier to trade, because the domestic product is treated the same way. Where the VAT is seen as interventionist is if you're importing something, it's an extra 20% on whatever you imported, if it's specific like that. Businesses may pay HST, but the offsetting HST paid with the HST they pass on. Okay, blah blah. Am I missing something? I don't see an argument that HST or VAT is a non-tariff. It's not. It would be hard to argue that, but listen. Currency manipulation, for example. Currency manipulation is whatever I say it is, because I'll give you the argument that it's currency manipulation. You can use rhetoric to make any argument you want. So, for example, I heard Trump's economic advisor talking about how tariffs are paid by the other country, that are paid by the other person, not the domestic person. And he used the example of a house, and you have a seller of a house and you have a buyer of the house, and he was saying the more flexible person or the more inflexible person pays the tariff. So he used this example, and when you hear the example, you say, yeah, that makes a lot of sense, except be careful about rhetoric. You always must question the assumptions, because I can get you to any argument. I can get you to that Canada is a currency manipulator. I can get you to Mexico as a currency manipulator. I can get you to the euro as a currency manipulator. I can make whatever argument I want. This argument worked like this. The buyer has flexibility because the buyer doesn't have to live in this city. The buyer can live in any city that they want to, but the seller cannot have their house in any city. They are stuck right there. So if the buyer offers 20% less to the seller, since the buyer has flexibility, it's up to the seller to come down and match the price, because they're inflexible. They can't just move their house to another city. You say, oh, okay, I get that argument. But you're making the assumption that a buyer is flexible. What about a buyer who cannot leave the city? Why would the seller lower their price for the flexible buyer when the seller says, but I have a lot of inflexible buyers as well? Which means the flexible buyer, if they want it, because there are inflexible buyers, would have to raise their bid if they really wanted that house. It's not all the power of the flexible buyer if there are inflexible buyers. Well, now suddenly that's a different argument. But I, that want to make a certain point, am not going to give you the whole argument. I will give you a sliver of the argument. That's rhetoric. So if you have studied rhetoric in any form, you know that no matter what the truth is, you can make an argument that says something different without lying. You simply don't have to tell the whole story. So currency manipulation, yeah, tell a sliver of the story. Come up with a contrived example of why it's currency manipulation, but leave out all the rest. So saying something like that is just saying, look, we're going to make whatever argument we want to make to justify whatever my boss wants to do. That's my job. My job is to make the argument of why he's doing what he's doing, and that's all. So I don't see cabinet members, independent cabinet members. I see Trump, and I just see different faces and different voices speaking Trump's words. None of these people are free to make up their own minds. Any time one of these the Secretary of State or the Treasury or Commerce and he wants to do something, they got to run to the White House and say, sir, I'm thinking of doing this. What do you think? And if he says okay, then fine. If he says no, that's the end of the story. There is only one decision maker in the U.S. government right now. And if he wants to call Canada a currency manipulator, it's up to Besant to make the argument of why we're a currency manipulator, not to say, well, Canada's not. We can't charge them with tariffs. It's, we're going to charge Canada with tariffs. I need you to make the argument that they're manipulating their currency. And they'll do it. They'll do it. Are charter holders good enough? Or is this gravitas like, no, charter holders get an expert role right away. Shouldn't the Fed prioritize boosting productivity over merely targeting inflation? How does monetary policy do that? I'd have to think about that and saying, shouldn't they prioritize boosting productivity? That's normally a fiscal, something on the fiscal side in terms of encouraging productivity. Usually that's done with things like accelerated depreciation on assets. So usually you get higher productivity by increasing the capital to labor ratio, adding more capital or more productive capital. If you want to encourage more investment in capital, you would, for tax purposes, say, okay, double depreciation in the first year. For 2025, if you buy it in 2025, you'll get double depreciation in the first year. So that becomes a monetary incentive for a company to add capital to their labor pool. I'm not sure how the central bank would do that. Lowering interest rates and resuming QE could spur investments in technology, drive productivity gains. Also drive inflation at the same time, right? While high rates crowd out investment, suppress productivity and keep inflation stubbornly high. Sticky inflation we've seen over the past year and a half suggests that the high rates is suppressing productivity. But well, yeah, I guess you could look at it that way. Again, with words you can make any argument you want. You could suggest that high rates are holding back investment in assets because they have to be financed, and companies are not going to finance these at higher rates. All that is telling me is the potential productivity gain from those investments do not outweigh the after-tax interest cost. So let's say that a company can float a bond issue at 6% IG, lower end of IG at 6%, and they face a 28% tax. That means that their after-tax cost of debt's around 4.3%. And if they're not doing this, that means the productivity gains from the investment in this do not exceed 4.3%, in which case they wouldn't do it. So it could be that these rates only encourage investment in technologies and assets where the productivity gains exceed the after-tax cost of it. If the investment hinges on a 1% difference, that's not really a killer app there. But I get what you're saying. Interested in your course, have absolutely no financial background nor experience, electrical engineer, never traded or invested. Does your course require a level of basic understanding? Yeah, I would say yeah, probably. But if you, again, go to mm.com, Mark Meldrum, not mm, we'll do the whole thing, markmeldrum.com. Register for free and start going through the Level 1 2018 series. My dyslexia here, 2018 series. And you can ignore a lot of the things like ethics and quant. Pay attention to the asset classes, equity, fixed income, derivatives, and alternatives, although I think you can ignore alternatives, and definitely go through the economics playlist. So with economics, equity, fixed income, and derivatives, in fact, you could probably just skip derivatives right now. Equity, fixed income, and the economics list, that'll bring you up to speed very quickly. If you take the applied level, when you subscribe to the applied level, you are getting at the same time, you are considered to have a free account at the same time. You would just have access to that as well. Watching your channel for some months, I can follow your videos on the market, but when you get technical like you did in the video about FedEx, I lose the plot. That's okay. That's okay. Probably shouldn't be doing those. If you, I have a rule: if I don't understand something, I don't do it. Which is why I don't invest in China or places like that, because I just don't understand the market. I don't understand the economy there. So if I don't understand it, I simply just don't do it. Where can I find the Discord group? Already applied to that. Purchase applied level bundle September 22. Regular watch for the market outlook on Sunday here. Was wondering how I am eligible for the Discord link. So all you have to do, if you have the applied level, is here's the site. Here's your menu. The first one is my videos. Click on my videos, and you'll get a sort of a panel up. It just on any one of them, you'll see, like, let's say sector studies or applied options or positions video. Just click on that, and the next screen you get to will have a listing of all the videos, and over here it says link to Discord. My hearing Mark is starting to come around to the thing that some tariffs on certain countries are not so bad. I never once was against some tariffs on some countries. There are reasons for tariffs. Let's take Costa Rica, for example. Very small population, 5.2 million. It can jump to about 6 to 6.5 million in tourist season, but no real domestic production. So if you tried to run that country on an income tax, you'd fail dramatically. But you got to get a tax from somewhere. So anything that is imported will have a tax. 30% on most things coming into the country, 100% on vehicles, because it's only people with money that buy vehicles in that country. Most of the locals use motorcycles because, well, there's no winter in that country. You can ride your motorcycle every day. So there are taxes based on what you use, and so the tariff is necessary because the tax base on its own wouldn't be enough to run that country, because there is no real domestic production of anything other than a lot of farming, and it's a heavy tourist-based country. So you get some revenue coming in from tourists, but it still wouldn't be enough. So there are some instances where tariffs are important, especially when you don't have an income tax. Tariffs has to do the heavy lifting. But I never said get rid of all tariffs everywhere, make it illegal. Certain tariffs make sense, yeah, but not the way Trump was doing it, this across-the-board 25% tariff on your closest trading partners. That's just stupid. Still hedging your bet, planning for the worst outcome. I'm still not worried about tariffs. I guess we'll see April 2nd, yep. The relief rally potential is real, yep. It's possible, as they say, market is forward-looking, so tariffs are already discounted. Okay. No question there, just a comment. Carney's recent actions make him seem like a classical liberal, like you say. As a Canadian, how do you evaluate the risk that once he's elected, he goes back to the ways that put Canada in the position? Well, that's the risk you're taking, right? He is stealing Poilievre's playbook right now. Poilievre says, I'm going to lower taxes on the lower income. Carney says, I'll lower it by even more. Poilievre says, I'll cancel the carbon tax as soon as I'm elected. Carney says, I'll cancel it now. He even went as far as to cancel the capital gains inclusion increase to 66% from 50%. Poilievre didn't say that. So Carney seems to be stealing all the platform from Poilievre and offering an alternative to that guy. And, that guy being Trump, is Poilievre Trump 2.0. But you do run the risk that once he's elected, he becomes another Trudeau. That the carbon tax goes right back in there. That he doesn't actually. That if he lowers taxes on the lower income, he just hits successful people again and again and again. There's no guarantee he's not going to turn into Trudeau, right? That's the risk. That's the risk that you take. Kamala Harris inherited Biden's legacy, and she didn't distance herself from it. Carney is trying his best to distance himself from Trudeau, but it's still, that overhang is still there. That can we take the chance that you got another one of these guys? I don't know. I don't understand how it's legal for a president to pump a meme coin. Legal. As I said earlier, Trump commits his crimes in plain sight. So that, if he did this behind the scenes and behind shadow companies here and there and it got out, there's a lot of explaining to do, because it doesn't look good when you try to hide something. But when you just do it in plain sight, when you do it in plain sight, no one even talks about it anymore. Regardless of the economic state of the world, Trump will go down as having personally made the most money during presidency. I think you're right. I think he will leave office. I think in 2028, I don't know that he'll leave office. In 2028, I think he will be among the most richest, if not the single most richest man in the world. I hear from left and right the tariffs, just as they are now, are killing certain Canadian manufacturing industries. Shops that build or repair, and it seems many jobs are set to be lost. How do you think this would be mitigated? I think Quebec has already introduced a spending bill. I think there is a spending bill being introduced to the extension of EI, things like that. Monetary policy, government bailout, the solution. It's looking like it. It's looking like it might be. How come you're going to Madrid? Because I got that kind of cash. Why not? I can do my work from anywhere in the world. I can be anywhere in the world and do what I do. And why not do it? Right? I don't have family here. I don't have wife and kids or anything like that hold me back. I shouldn't say the word hold me back for some of you out there. That anchor you. Let's say that anchor you to one place. I don't have any pets that I got to take care of since my best friend passed a couple years ago. So why not be anywhere in the world? Last Q&A asked that if I take a situation like Trump has put tariffs on Canada on this X thing, what will happen because of it? You said we cannot definitely say anything about the future. I don't recall that. But here in Market Outlook, you do your analysis. You look at different kinds of reports like jobs report, unemployment reports. Mixing that with your experience, you say that this will or could happen because of tariffs. Well, there's, you can look at certain things and you can say this is what I anticipate, and I'll position for what I anticipate. Everyone does that, but I don't know if it's going to happen. Beats the hell out of me. I could be dead wrong. I'm looking at my portfolio this morning and I can see that I'm dead wrong on a couple of things. Right? Well, I'm dead wrong. I'm dead wrong today. I may be right in a couple of weeks, or I may be even more dead wrong. Thing is, I don't know. If you say, well, where's the market going to finish today? Up or down? Haven't got a clue. Nobody knows. Nobody knows that. Don't know. Beats me. Where's it going to be sometime over the next 10 years? Higher. Does it go lower first before it goes higher, or higher first before it goes lower? Not a clue. Nobody knows. Nobody knows. You just can say, I feel that this would be the outcome, and you take a position for that. If you're pretty good at it, and you're right 70 or 80% of the time, you can do quite well. But you will be wrong. Everybody is wrong. Everybody is wrong on things they do. You're never going to have 100% hit record, because you can never know definitively. All these experts coming in news channels or podcasts are saying this will happen or this could happen. What to make of it? Or all those predictions are educated guesses? Some of them are just wild guesses. Some of them are somebody saying I'm predicting this and it's more or less this will happen, and others are just based on the evidence that they're seeing and the way they see the world. This is their best guess as to what they think will happen. What about when Pierre Poilievre says that the modest income earners will pay 15% less tax, so they will spend more on consumption from small business? and which will lead to more jobs. They will need more staff. Is this a prediction or something? Well, it's not a prediction. It's if I leave you with more money and you're in the lower income brackets, I know you're going to spend it. You're not going to save it. I know you're going to spend it. So if we give the bottom, let's say 15%, the bottom 20% more money, they will spend it. And in spending it, the hope is that it's spent on non-scalable things where you have to hire more staff to meet the demand. I don't know. But it's not a prediction. Now, if you say it'll create this many jobs, that's a prediction. Who knows how many jobs? It may create none. Will you agree that at the least in social context, we can definitely say what will happen? Nope. Life, for example, Canadians will get angry because of tariffs. Can't definitely say that. Not in social context. I don't think you could say anything definitively in a social context. Discord. Would your applied level pass be suitable for retail investor looking to up their game? That's exactly what it's for. Would CFA courses be a prerequisite or comply? Applied can stand on its own if you have some understanding of markets. If not, the level 1 2018 is a good companion. Trump's tariff policy of Chinese goods, how do you think it will affect countries with shared border with China, such as Vietnam? I don't think it will affect, the U.S. cannot impose duties on Chinese goods going into Vietnam. The U.S. can't do that. The U.S. can't impose duties on European goods coming into Canada. All the U.S. can do is impose duties on products coming into its own country. That's all it can do. So I don't think it will have any effect. The effect it may have is to increase trade between those countries. You say they are forecasting a drop in real GDP, but that's not the case. They're simply forecasting slower growth from 2.1 to 1.7. Yeah, that's a drop in GDP from their last forecast. They forecasted 2.1, now they're forecasting 1.7. They're forecasting a drop in real GDP from 2.1 to 1.7. I'm not getting. Aren't we saying the same thing? Also, would a 4.4% unemployment rate be enough to classify an economy as in stagflation? I don't think so. No. Do you think Canada is best poised for dominating the next decade out of all G7 after Trump has awakened the entire country? If you can get rid of those interprovincial trade barriers, yeah, I think you can probably get a lot more trade going within the country, which would increase the GDP within the country by relying less on imports. Right away, that would be a good thing. Natural resource, critical minerals, big landmass surrounded by bodies of water, 3 sides, top universities, culture, Western values. It just needs a leadership. Thank you for saying that. Yes, it needs a leadership. Absolutely, it needs leadership. But Canada's always had an investment problem when it comes to investment in finished goods, in the production of finished goods. Because we would have to be a very large exporting country at that point because we have a small population of 40 million. So there's only so many production plants that you can build to produce output that the Canadian economy can absorb unless you dramatically increase its population. You would have to be an exporting country. Well, if other countries start erecting trade barriers like tariffs, having more capacity than your domestic market can handle is a poor investment. So you do have to be careful about how much you invest in final productive capacity, because if it's overcapacity, you're going to have to export that. And that then sets up a danger because other countries have to allow it into their country. Could be a moment of lifetime. I think our population is too small to really rise to that level. But one thing we certainly could invest in is not old economy stuff, low value added stuff like manufacturing, uh, but a tech sector or a research sector. Why not have a tax policy or a tax-free zone that starts to favor foreign investment into Canada for that particularly? Why not that? Why not emerging, investment in emerging industries as opposed to this? Let's be the 1950s again. Let's get manufacturing back. Let's get blue collar jobs back. They're low value added. So, as a businessman surrounded by billionaires, was Trump not supposed to make the U.S. economy bigger? Well, he is making it bigger, right? He is making it bigger. Don't pay attention to the man behind the curtain. Don't pay attention to what your eyes can see. Listen to what he says. He is making it greater. Rather, he's taking it to a dismal place. No, he's not. That's fake news. That's fake news. Where'd you read that? CNN? I don't believe he is not aware of this. Don't don't think not. No one's bringing him bad news. No one's telling him, look, you're killing everything, sir. You're killing everything. No one's bringing him bad news. No one. Is he aware of it? I don't know. And why is he doing this? Could you explain that philosophically? Well, you have to think about what he really wants. And what he really wants is greatness beyond what anyone has ever achieved, however way he's going to get it. He wants to be a Caesar. He wants to be a dictator, although in his mind, I think he believes that he would be a benevolent dictator, not an evil dictator, but a benevolent dictator. He would be King Joffrey. He would be quite vindictive, which means that everybody would be afraid of dear leader. And that means you can only tell dear leader good news. You can only tell dear leader that he's the best, that he's the greatest. If you go back 2 weeks, go back to Bill Maher's Real Time with Bill Maher, when he had Fareed Zakaria on, and he summed up Trump really nicely. He said, world leaders have figured out how to deal with Trump. Number one, praise him. Tell him he's fantastic. Number two, give him an award for something. Just make something up, but hand him an award. Say, this is the highest civilian award our country has. It's never been given to a foreigner ever, but you are just so great and so wonderful. Here you go. He says, if you do that, you'll get anything you want out of him. That's all you need to do, is tell him he's already the greatest in history ever, and that everyone loves him and he's wonderful, and they just support him so much. And oh my God, can I just bend the knee here and kiss your ring? And here's an award for you. And he said, if you do that, you'll get everything you want. And he named 2 leaders. He said, if you saw them in the White House, they did exactly that. They did exactly that. And that's all you have to do. Is he aware of it? I'm sure all he does is he stares and watches TV. He says, I never watched that channel. I didn't watch that show. I don't know anything about it. Then he goes on to tear it apart piece by piece. For somebody who's never seen the show, you really know a lot about it. Anything that is critical of him is a failing network or a failing paper or a failing publication. Anything that's supportive of him that's a wonderful. Who are you? Who are you with? I thought, oh yeah, you're a good one. If your question praises him, I don't think anybody's bringing him bad news. I don't think anyone's bringing him bad news. Those eyes. That's Guess Who song? Those eyes. Oh, or is that Burton Cummings? I think those are just Burton Cummings, not Guess Who. I think the market will be just fine. Recent dip was a little bit too orderly and calm to be genuine chaos and fear. I read an article around one of the ATHs created during the Trump optimism rally. that claimed some institutional guys were complaining that retail was pushing prices too high too fast and they couldn't get in the market at the levels they wanted. Personally think all of the recent fear porn the media has been going on about, plus that very common orderly sell-off, was simply market manipulation. Oh, okay, let's move on. I know a lot of people have a reason to hate Musk, but I've seen very smart people cheering on the burning of Teslas. Yeah. It's hurting Musk, but also ordinary people who just like the car. What's your opinion on the hate? Is it okay to feel that way? I don't know. I think it's just the human condition that when you see somebody behaving in a way that you disagree with, you get a certain pleasure from seeing them taken down or from seeing them lose. Even just among your own friends and family, you tend to feel better about yourself when you have a friend who suffers a setback, a financial setback or a career setback. You tend to feel a little bit more superior, a little bit better about yourself. That is a sort of a human condition. And if you want your feelings to come out even more, if you want your expression to come out even more, put yourself in a crowd. The crowd will bring it out of you as well. And the crowd may bring out of you things you may otherwise keep quiet, because it gives you permission to engage in social behavior, because now it's not me, it's everyone, so it must be okay. It must be perfectly okay for me to say these things about other people if everyone else is saying these things about other people, but previously you may have only thought it, but you never would have said it. I don't know if we would call all of these people independent thinkers as much as, just jumping on the next bandwagon. I criticized liberals for that for quite some time, calling many of them bandwagon liberals. That at any point in time they could have said, hey, we disagree with this or we disagree with that, but not until the bandwagon drives by do these people jump on it, and then they begin to moralize like they've always been there. And then they'll get off and they'll hop on the next bandwagon that goes by, and they'll moralize like they've always been there too. That if it wasn't for the media and social media and the group and the crowd, many people wouldn't even know what they believed in until they were told. So I think that this is just one of those bandwagons that are going by, and everyone's jumping on the bandwagon because they see other people on the bandwagon, and it gives them permission to do what they otherwise normally wouldn't do. Even if they thought it, they wouldn't do it. So, well, that is the end of it.